unless you've been hiding under a rock, you have watched the ups and downs of the Dow, Wall Street, S&P 500, like all of the market itself has been turned upside down by massive uncertainty. What that's doing is it's causing like investors, institutional investors, retail investors, all of the people who are financial advisors and asset managers to start pulling money out of Wall Street, out of the stock market, and moving it to different places, gold, bonds, a lot more stability. And why does that matter for real estate investors like you and I? Well, the debt for all commercial real estate is tied to the treasury, period. So as the treasury starts to fluctuate, people move their money around, naturally it's going to look a lot better for most people. But this video is really about how you can maximize the uncertainty point of Wall Street and maximize your opportunities, because that's really what this is about, right? So here's what's causing all that uncertainty in the market. Number one, Donald Trump. Trump 2.0, his economic plan for the world right now is based on what other countries, like I think that's Canada and a bunch of other people are bracing for this, especially for today, is what they consider the tariff war. So basically, what that works out to be is like he's saying, hey, look, if you guys don't do what I want you to do, we're going to push a tariff anywhere from 50% to 25% to 10% on any goods that comes over here. So it's going to cost you more to do business with us. And then they're saying, hey, if you do that to us, it's going to cost you more to do business with us. And all of a sudden, there's this massive standoff going on right now. What is that doing? It's making investors. Now, when Wall Street talks about investors, they're not talking about you guys. They're talking about JP Morgan, Goldman. They're talking about Blackstone, not Blackstone and BlackRock, but definitely BlackRock, because your money is tied to BlackRock, period. They are the largest asset management, financial management on the planet, period. I think they're at $11 trillion of assets under management. Your money. And if it's not your money, it's the company you work for's money, or their main company that owns the company that you work for's money. It is your money. That uncertainty is associated to you, the little guy. Every time you see it, it's associated to you. So tariffs do affect you. It affects Wall Street. It affects the fluctuation of all cost of goods. That is what's happening right now. Now, the next one is going to be the trillions of dollars that is coming to mature, $2 trillion specifically in the debt market as it relates to commercial real estate. That's office, retail, industrial, multifamily, just regular developments, single family homes. All of that stuff is tethered to what's going on right now. So that said, there's gonna be right now it doesn't look like it. You guys don't see it because you're not playing this game. But there's gonna be a supply and demand shift, especially in multifamily. I think I read something the other day or yesterday that said it's like $500 billion of debt coming due in a relatively short amount of time just for the multifamily out of the $2 trillion of debt that's maturing. So what does that mean? If let's just say you're a developer and you want to go and you wanted to build a 500 unit apartment complex or a 300 unit apartment community, whatever, and the debt for you to get that financing is unfavorable, then you can't get it. It doesn't pencil. No lender, Fannie, Freddie, JP Morgan, Goldman Sachs, they're not going to partner with you right now because they're like, hey, look, we're going to wait on that. So they can't get their equity partner involved. They can't get the debt market involved. So they're going to wait. So you couple that up with about 12 months of not developing. It's, developers develop. That's how they make their money. Let's say you're going to do 2,000 units a year, and we were talking about 300 units, but let's move to 2,000, and you can't do that. 1 year passes, not happening. The next year passes, not happening. That's 2 years. That's 4,000. There's 4,000 units not being built. Now, even to build those, to get planning, permitting done, entitlement stuff, get it all up and going, it's going to take at least 2 years or a year for your permits, and then it's going to take a year for the development. That's 2 years. So that gap of 2 years of not doing it, and the gap of when you finally do it, it takes another 2 years, 4 years gone, right? That is going to happen. So anything that was built 18, 19, 20 now has come to market. And also that doesn't include the year timeline that you got to trade your debt from development to permanent financing unless you're going to sell it. It's going to take at least a year for you to do the lease up and stabilize it, because lenders, before they give you new debt or a new buyer comes in, wants to see 85% of that property you built stabilized before they'll give you the debt. Period. That's just how it works. So all of that said, that just means that at some point, the supply that you see that you're like, man, they're building stuff everywhere. That is the end game of the last developer. So they might not have got the opportunity to put in the plans to build anything for another 2 years. It wasn't happening. So that means that once the stuff you see that looks like there's going to be a glut of opportunity of all these new properties coming up, that's going to be absorbed. There's going to be a gap of about a year to 2 years where that's not going to happen. Why? Because the maturity that's already in play is going to start taking hold, and it's going to strangle out the developer, the people who just bought a few years ago that have to now sell because they can only stay in those deals for 3, 5, 7 years, and then trade out their investors. Their investors are CalPERS. Their investors are the Florida State Pension Fund, the Fireman Pension Fund, the Police Department Pension Fund, the Teachers Pension Funds. Like that's their investors. UCLA, Harvard. It's not your grandma and your grandpa. If your grandma and grandpa are anywhere tied to those properties, it's because their money is being held by Fidelity, Vanguard, all these other players, Merrill Lynch. That's the difference. So the opportunity here is as those opportunity, like as the market takes the turn and we get the opportunity, because those people that have those big multifamily properties, they got to sell, right? This is the discrepancy of what's happening. This is the opportunity. If you can execute and take advantage of some of these bigger deals that have to come to market because the debt on those properties are maturing and they have to exit. They got to recapitalize, meaning refinance, or they got to sell. And if they come to the market and try to sell, when the interest rates are still high, then the price points have to come down when they trade. That's the value here. But that is happening, period, whether you want to do something about it or not. The reason why there's an opportunity there is if you know what to look for, you get to play the game. So while Wall Street is all got their panties in a bunch or underwears in a bunch, whatever it is that you want to say, the discrepancy going on with the tariffs, cost of goods going up. That means what you buy, everything's going up. The uncertainty, investors pulling money out of the stock market and moving it around, bouncing around. This is what's being talked about right now: reducing the tariff revenue, declining in imports, lowering returns on capital and labor, lowering the GDP, estimating revenues. They're counting on this working. No one knows, and while nobody knows, just like when there's fear, people run away. A confused mind says no. So people wait. They sit on the sidelines. While that's happening, the door of opportunity will be left open. It'll be left open in the market. It'll be left open with taxes that people don't know what's going to happen with the tax thing because they're worried about this thing. But the opportunity for real estate investors like you and I are going to be coming because of the maturity date. Now, I thought this was going to happen 2 years ago. It dried up. Nobody did anything. Then after that, the next year, the last year, that dried up too. I thought this was going to change. I was like, hey, things are going to loosen up. They're loosening up now because we're under a new administration for tax for with Trump. But while this is happening, what do? You have to take advantage of Wall Street creating uncertainty for investors while the investors are not playing the game and people have to sell the best assets. Now, when I say people, I'm talking about JP Morgan, Goldman Sachs, Blackstone. They're offing and or they're buying new assets. This is the transfer that I always talk about, the transfer of wealth that you and I, as the everyday retail investor, can actually take advantage of if you're in the right vehicle. We're not talking about single family houses. We're not talking about office buildings where you're like, oh, let's buy a small office building and convert it to residential. Costs too much money to do that. You want to buy something existing that there's some uncertainty around it where you can go steal stuff. Right now, LA, I believe the California real estate market is going to be the number one real estate market that the country's ever seen. Even though people have been shitting on California for a really long time for their real estate, their politics, the governor, the mayor of LA, the rent control, the cost, the timeline, the red tape, all of that stuff is going to be the benefit. California and New York real estate is going to skyrocket over the next 2 to 3 years. Even though people are like, hey, it's Miami. Miami's not going away. It has to. People dump money there. But let me tell you what happens when people dump money into a place. Once that money is secured and it's growing, the growth from this place is going to go back and try to take advantage of just what I'm telling you to do. The maturities of the best assets in the best cities on the planet, they're going to take that money, they're going to steal those assets again, even if they're stealing from themselves. I just dropped a bomb on you. Even if they're stealing from themselves, that is the game that you don't really understand institutional players play. They can go back and buy the last property that they had at a discount. It doesn't matter. Money cares about money. It doesn't care about who has the money anymore. So if you want to play this game, you have to stop thinking like a little guy and start looking at what the big guys do. Like I'm moving over to be a big guy. I'm not going to be a little guy forever. And I can't do it by myself. I got to do it with you guys. Goldman Sachs doesn't do it by themselves. They call Steve, Steve Schwarzman from Blackstone. Hey, we got this opportunity. You want it? Yeah, we'll partner with you. Good. We'll put up 10 billion. You put up 1 billion, and we'll call JP Morgan and see if they want to play. Yeah, you know what? Let me call Larry over at BlackRock. Let me see if they want to throw some money in this stuff. They have a network of people that they play the game with. And unfortunately, we are always taught by our parents and uncles and aunties and then the small entrepreneurs that we know that own businesses around the neighborhood or the city where you grew up in, they don't play that game together. It's like, nope, I got to keep my stuff and I don't want to partner with nobody because partners are bad. That is bullshit. So, what am I saying to you? Take advantage of the opportunity. The uncertainty in Wall Street is creating massive opportunities. You want to double and triple your investment over the next 5 to 7 to 10 years. This is going to be how you do it. But you don't want to do it in what they're telling you to buy. Like they're saying go into AI, they're saying go into like naturally tech, all this AI war that's going on right now. What else are they saying to go into? Crypto, Bitcoin, all this stuff. Great, go do those things. But if you want hard assets, real assets to convert your cash that is trash, get it out of Wall Street, get it out of your retirement and IRA accounts, get it out of the bank savings accounts, and you want to move it into a real hard illiquid asset, real estate, and I'm talking about multifamily commercial real estate, big real estate at scale, that is going to be the place to put your money. You don't have to worry about what they're dealing with right now. As a matter of fact, if you were to invest in multifamily real estate with all the uncertainty, your value of your asset will go up. Lumber goes up, drywall goes up, glass goes up, steel's going up, development costs and labor is going up. Everything's going up. So the value of your asset also goes up with it if that's where your money is. But if your money's sitting in the bank, it's not going up, it's going down. You go buy a loaf of bread that is now $10 or $5 or whatever, or eggs that's 12, $13 for a dozen that last month, 2 months ago, 3 months ago was $3. Your buying power, your cash is turning into trash unless you put it in an asset that turns it into gold. Let's go. So, anyways, take the time. Just check out what I'm saying. Don't believe me. Like, don't listen to what I say. Watch what's happening. Watch the discrepancies. Watch the uncertainty in Wall Street and listen to what they say. Don't listen to it like a little guy. Listen to a big guy and follow the money. People are moving their money into real estate. Now you're hearing they're moving their money into Bitcoin and crypto, but you can't take a big enough position in crypto or Bitcoin right now. Invest in real estate. And then if you're going to do that, let your real estate buy your Bitcoin. Or if you're like me, let your real estate continue to buy more real estate. Do not play the game that the big boys are playing until you become a big boy. And I got something for you guys later because I am becoming a big boy and I want to do it with you. Can't do it by myself. I set up Bell Capital to do it this way because I'm watching what's happening. I've been watching it. I've been through 3 real estate cycles. And I'm sure if you've been around at all, you've done it too. But very few people take advantage of what they are dealing with because when you're in the storm, sometimes you can't tell that it's raining. I can because I don't want to be in the storm forever. And I'm like, okay, this is going to be over. But now that I'm in the storm, I'm going to go ahead and start building shelter, even if it gets wet along the way. Boom, let's go. So, anyways, go to bell-capital.com, register there, or you can schedule a call. Call to myself, somebody on my team will reach out to you, answer your questions. You got to be accredited. You got to have a good attitude. You got to love real estate. Or like this video, share the video, comment on the video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time. And like I said, you can leave me a comment. Leave me a comment. Do you believe this? Are you listening to what I'm saying? Are you already playing this game? Are you new to it? And what I'm saying is like, whoa, I didn't know that. But I'm telling you, a couple things are happening. The tariffs causing a massive disruption in Wall Street. The taxes later, when they announce, hey, we're going to lower the taxes or raise the taxes, whatever we're going to do, massive disruption on Wall Street. And it's going to affect real assets because if you're in a real asset that gets the benefit of taxes, you're going to win. And last but not least, the maturity on the $2 trillion worth of commercial debt that is coming up. It is still happening, folks. It is going to happen, period. If you don't take advantage of it, you're going to lose. It's not on single family. People in single family houses have a 3%, 2% interest rate on their homes. They ain't selling. The opportunity is not in single family. The opportunity is going to be in commercial real estate and multifamily specifically, because that is the most stable real estate, the class of real estate that you can find. All right. So let me know if you need anything. Let's go. Boom. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.